Good evening and welcome to the Audit Committee on 16th of March 2023. Take item 1 on the agenda, which is apologies for absence. Are there any apologies for absence?
I'm here to sub for Councillor Habib Tijan. Gloria Para.
Thank you, Gloria. Agenda item number 2, which is a record of the meeting. Can I sign the record of the meeting held on the 10th of January 2023 as correct? Agreed. Agreed. Item 3 on the agenda are urgent matters. I understand that there are no urgent matters this evening. Item 4 on the agenda is declarations of disclosable pecuniary interests and other significant interests. Do we have any interests? Councillor Colvin.
Yes, an OSI chairman in the accounts, because there's several references to the Medway Development Company. I'm a director of the Medway Development Company. I also share its operational subsidiary, MDC Land and Projects Limited, and I have a dispensation from the Council Conduct Committee to speak and vote on issues concerning MDC.
Thank you, Councillor Goldwyn. We'll now take item 5 on the agenda, which is the Statement of Accounts for 2021, External Audit Findings Report for 2021, and the External Audit Sectorial Update. I'm going to ask Phil Watts to introduce this report. Phil.
Okay, thank you, Chair. This has been a long time coming, in fairness, so I probably won't prolong the debate any longer and hand straight over to our auditor, Darren.
Thank you, Phil. So the paper before you is an update on the last time we reported to this audit committee. Just for transparency and ease of reading, we've highlighted anything that's new as underlined text. So you'll see that a lot of it remains as was. The audit, one might say, thankfully, the audit's coming to the end. We're starting to wrap up the final bits and pieces. We set out on page 23 of your papers those few areas that we're currently working through. They're not, even though there are about half a dozen or so bullet points there, they're not at the beginning stages of each element. We're substantially through those, which is why I'm quite comfortable in presenting an updated position of errors both that have been identified, have been adjusted in the financial statements on your agenda tonight, and those errors that we've discussed with management and haven't been adjusted for. And we set those out on page 56 of the papers. That sets out those adjustments that have been made in the financial statements. On page 59, we set out the errors that are unadjusted that arise from the 2021 audit. We also, on page 60, we highlight those errors that are carried over from 2019-20 that weren't adjusted in 19-20 and have a continuing impact on the 2021 financial statements. If we take all of those errors that we're reporting to you tonight together, I don't think any of them are material and would therefore impact on the outcome of the audit. There's just one slight caveat that I think it's appropriate to share with you. So on page 32 of the report, we highlight some of the areas that are still in progress, and one of those is our work on property, plant and equipment. The focus on the valuation of property, plant and equipment has increased tremendously over the last few years. It's been an area that the Financial Reporting Council has focused and insisted on more audit work to a much more granular level. So the expected standard these days is that we test the inputs, the assumptions, the judgments that your expert valuer makes to ensure that it correlates with our understanding, it correlates with market intelligence, and that we understand the methodology that's approached is reasonable. We're working through that, and we need to talk to your expert valuer who valued your council dwellings, because there's a bit of the picture that we're not quite seeing at the moment, and I'll just explain a little bit more about that. So your council dwellings are valued what's known as on the beacon methodology. That means for the 3,000 or 4,000 properties you own, they're all allocated to a type, and for each pot of properties, a beacon, a representative property, is identified. The valuer would value the beacon and then apply that valuation of that beacon to all other properties in that pot. You have 198 beacons, and this year the valuer looked at and made a value on 118 beacons. We selected 30 beacons to test the valuer's methodology to make sure we understood it, test against market data. And what we found is that in all instances, the valuer had considered comparable properties that were being sold in the private sector to inform his or her valuation of the beacons. And when we tried to reperform that, we couldn't get close to his or her calculation to allow us to have some comfort over the final valuation in the balance sheet. So that's, excuse me. So that's the piece that we're still just trying to finish. And we're only pursuing it because, as you'd appreciate, with the value of council dwellings at 156 million on your balance sheet, a small change that's multiplied across 3,000 properties could have a material impact. I only mention all of that just to highlight the issue and to acknowledge that we're still working through that with the valuer. I can't definitively say it's wrong at this point, but it has the potential where we would have to say, we're aware of this issue, this is what our final view on it is, and potentially there could be one final adjustment to the financial statements before you. But I don't want to prejudge that. A conversation still needs to be had with your valuer so we can understand how he made that final judgment to value the housing stock. The rest of the report, I think, speaks for itself, so I'm happy to pick up any questions that you may have.
Thank you, Darren. I'll open up to the floor. Adrian.
Yes, Darren, just on that, so imagine actually to get a value on those sort of properties, it's not easy because if you compare with the private market, what you're valuing a property with a sitting tenant, and that sitting tenant has quite a number of rights. That is probably not so, the amount of rights wouldn't be so rigid in the private sector, because there would be a different form of tenancy agreement. So yeah, I can see how that could be quite a difficult undertaking, because you can't market mark to market for a vacant property when they're not vacant. They've got long-term tenancies, and some of those also got the right of succession. So yes, I can see that's a bit of a minefield. The rest of it, I've got to say, having had a good read through this afternoon, I was very impressed with all the detail in the audit, and I was reassured that those anomalies are not material, but they do add up to quite, to me, what is quite a considerable sum. But it's reassuring that it's not a material consideration. The only niggle I've got, and it's quite to me, it's quite a strong niggle. So forgive me for because I take the council's reputation, and our standing in our local community to be very, very important. Where it says on Appendix 1, where it says headlines, and you've completed our value for money work on it. Whilst I fully accept that because our children's services have been rated inadequate by Ofsted, that reflects the whole audit, because you can't, it's not a curate's egg, but you have to dive really deep into that paper before you get that explanation of why our value for money is in the situation where it describes, we identified a significant weakness. Now, that is on the face of it, that's quite damning, but yes, we have got a significant weakness when it comes to children's services. We've got to accept that, but we are working our way through it, and there's a huge amount of work going on to get us out of that situation. But I think when you talk about headline, that should be balanced a little bit by explaining that at that point. I mean, it is fully explained later on in the document, but to me, people will just see that and think the whole of Medway Council value for money is not good. I think for the rest of the organisation, from my own personal experience as a portfolio holder, officers have put a huge amount of effort into making sure we do get good value for our services, the goods and services we buy, and all and make the best possible use of our resources. A bland statement like that, I don't really does reflect the reality of the situation. I'm just wondered if that could be not changed, but caveated in another paragraph to explain more fully why that is the situation.
I'll call on Darren first, and I'm going to ask Phil to come in.
Thank you. Can I just check, Councillor, are you referring to the audit opinion within Appendix 1? So,
yes, but it says on page 24, where it says headlines, Appendix 1, value for money arrangements.
so page 24 of the papers.
Yes, yes.
Yes, so I understand what you're saying. I think when you read this report, I can see why you would reach that view. What this report does also refer to, though, is the very detailed value for money report that's been presented to this committee earlier, and that gives a much more balanced and nuanced reporting position. This is very much a summarised position for this report, just highlighting that weakness. But I can assure you there is a balanced reporting picture through the auditor's annual report that this committee saw, and I think exists on your website.
Okay, so can I be assured then that the final document will be not as blunt, but it will be properly balanced? No, I'm not trying to get out of the situation we're in with our children's services at all. We fully accept that, and we fully accept we've got to get it right. But, and as far as the technical side of the audit, if you fail on one bit, you fail on the lot. I get that. But I think that it does need to be balanced for public consumption. That's all I would.
So what we're trying to, on page 24, when we're making that headline, what we're trying to say is that significant weakness is it just in respect of Ofsted's judgment on the children's services. So we're not saying that it reflects across the breadth and depth of all the services that Medway delivers.
thank you, Chair. I wasn't going to talk about the issue with the value for money opinion. I wanted to, I suppose, come back on the issue that Darren talked about with regard to the valuations, because the committee might well be sitting here thinking, well, what is the implication of that? The auditor still is not satisfied with the explanation that our valuer has given. My view is that there is very little risk here because we've got very professional valuers that we went through a robust process to appoint to undertake these valuations. And it would be, I think, a brave auditor, Darren would probably admit that, a brave auditor that would suggest that a professional has got this wrong. What the position we're in at the moment is that they haven't yet demonstrated to the auditor the thought process and the underpinning of that valuation. Once they do that, I'm confident this issue will go away. So it's just to assure the committee of that.
Gloria.
I think I do share in what Councillor Govan is saying, Chair. As probably a comment there, just to clarify why we are in this situation. I think that's what he's asking for, and I welcome that as well, because the heading says headlines. And if, yes, we do understand that elsewhere within the report, you know, there are clarifications as to why we are where we are, but if you could just, because some people may just read that, those headline bits, those summaries, and if you could just clarify with a statement or so, or a sentence to say, well, they are in this position because of, especially for those who will just read their specs and they are done with the whole report. That's it, Chair. Thank you.
Thank you, Gloria. I'm just going to, if I may, go back now to the follow-up for the prior year recommendations that we had. And I must admit, I'm rather concerned, I'm going to throw this at Phil rather than the auditor, at some of the things that are coming out. If we take page 52B follow-up, which is for the 2019-20, I know, but it says that work on the 2021 financial statement has identified, and this is cash and bank reconciling items, still exists. And there's a lot of the things that I'm seeing here, disclosures. Our work to date has identified a number of disclosure errors within the 2021 figures. And I'm just a little bit concerned, Phil, that we're not doing what we should be doing, if that makes sense, yeah? So can I have some sort of guidance as to what we're going to be doing about making sure that we are overcoming these obstacles and that going forward they won't be coming up in our auditor's report?
Yes, thank you, Chair. I think I'd say that some of this is a timing issue because by the time the 1920 statements had been audited, we had already finished 2021 and we were already partway through 21-22. Some of the things that were identified, we already knew that whilst we would need to put them in place, it was already too late to put them in place at that point. But obviously we have taken it on board. We are working with the Treasury and Exchequer teams to make sure that we bring that forward and make sure this doesn't happen in future.
Thank you, and I'm very pleased with that assurance. Adrian.
Yes, sir. Thank you. Not the auditor's report, but the document that goes with it. I've got just a very minor, in this comparison with other things, niggle, but I think it's an important one because this is the document that's going out in Medway Council's name. It's the pictures that have been used to illustrate and lighten the document, plus the captions. Generally, the photographs are umpteen years out of date, and some of the aerial photographs showing views over the River Medway, we've had a substantial change of things with our regeneration programme. And then if you look at the captions, the one on page 124, which claims to be Who Marina, that's number 1 basin in the dockyard. I never knew the Strand was in Strood. Our Gillingham colleagues, I think, will be a little bit upset about that. Sort of move on. The one of St Mary's Island, again, is taken from one of the dry docks in number 1 basin. It's not St Mary's Island. So, you know, could somebody who's got a little bit of a knowledge of Medway, Jackson Fields is not in Chatham, it's in Rochester, and I don't think really Upnor Castle could be classed as being in Rochester either. I think my colleagues in Wainscott and the Who Peninsula might be a little bit... it just... Anybody with local knowledge reading that would think, do these people really know what they're talking about? I know it's a very minor thing, but I think it's important that, you know, this is a document that's going to be going out into the public realm, and we don't want, you know, people to pull holes in, because I always think if I spot mistakes of things I know, how many things are in there that are not right that I don't have the knowledge and the technical skill?
Thank you, Councillor Galvin. I will say my team have been through the figures and words down to huge detail. I'm very confident that everything is absolutely fine with regards to most of the data in there. I do accept some of the captions are wrong. The stock photos, we haven't been in a position with time to get to comms to get some up-to-date photos, so I apologise for that, but we will make sure the captions are corrected before it goes on the website.
That was just as an aside. I'm not...
Tristan? No? Okay, so we'll take the recommendations 7.1 to 7.4 of the report on page 19. 7.1, the committee notes the issues raised and judgments made by the auditor as presented in Appendix 1 to the report. 7.2, the committee agrees the management letter representation presented at Appendix F within the report findings report itself presented at Appendix 1 to the report notes that the Chief Operating Officer will sign this letter on behalf of the Council at the conclusion of the audit. 7.3, the committee approves the Statement of Accounts 2021 as presented in Appendix 2 of the report. And 7.4, the committee notes the update report presented at Appendix 3 to this report. Are we all agreed on that?
Agreed.
Thank you very much. We'll take item 6 on the agenda, which is the Risk Strategy Annual Review. I'll ask Phil to introduce this report again.
Okay, thank you, Chair. This report represents the annual review of the risk strategy, although it has changed little over a number of years. This year, though, we've proposed a number of changes to clarify what's expected of managers and simplify the evaluation of risk. These are the main changes that I'd like to highlight for you. We've disbanded the Office of Strategic Risk Management Group and put responsibility for reviewing and updating the Strategic Risk Register firmly back with CMT. We've made a distinction between live risks, which we actively manage, and managed risks, which are mitigated to target level, but which are too significant to de-escalate. We've provided clear definitions in the strategy now for what constitutes catastrophic, major, moderate and minor impact for different types of risks. We've made it more clear that risk needs to be managed at all levels of the organisation and that there is a process for escalating and de-escalating risks. We've introduced a simpler 4x4 matrix which recognises that understanding the impact is more important than understanding the likelihood. We've amended the tolerance threshold, which should ensure that CMT and members are focused only on the most serious risks to the Council. And we've tried to provide greater clarity over roles and responsibilities in relation to risk management. Audit Committee is asked to consider the revised risk strategy as set out in Appendix 1 to the report and submit any comments to Cabinet. Thank you.
Thank you, Phil. I'll open this up to the floor. Adrian? No? Okay, I've got nothing on this either. So, we'll take the recommendations at 6.1 of the report, and that is the committee is asked to consider the risk strategy 2023-24 as set out in Appendix 1 to the report and submit any comments to the Cabinet. Are we agreed? Agreed, thank you. We'll take item 7 on the report, which is the internal audit update from the 1st of December 2022 to the 31st of January 2023. I will ask James Larkin to introduce this report. Over to you, James.
Thank you, Chair. Yeah, the report at Appendix 1 is the third and final update on progress against the 2022-23 internal audit plan ahead of the annual report and details the work of the team from 1st of December 22 to 31st of January 23. Section 4, starting on page 331 of your pack, shows how our resources have been used over the period and also details the latest projections on available resources as a consequence of staff sickness and periods of vacancy. Full details of progress against the plan can be found in the tables at Section 5, starting on page 332, and details from reviews that have been finalised since our last report are included. An update on the team's key performance indicators for this reporting period is provided at Section 6 on page 340, and you will see that plan delivery at the end of the reporting period was 48% with 27% underway. As of today, we are now 67% delivered and a further 24% underway. Section 7 of the report on page 341 contains details of a revision to the agreed plan with removal of the review of smart parking. This is mainly due to the fact that there are more limited areas of control for review than first anticipated, but it also helps us account for some of our lost resource. Finally, Section 8 of the report provides an update in relation to all management actions with the second table starting on page 346, detailing all those that have been outstanding for more than 6 months after their agreed implementation date. There are responses from the services and revised implementation dates have been requested in most cases. I'm happy to take any questions members may have.
I'll open up to the floor. Adrian.
The only one that sort of caught my eye was on page 347, the tree service, where, well, I've got it right, we've actually got to sort of look at every tree and see whether it needs a TPO, and that's the way I read it. I would say that, not sure that would be really good value for money. Also, I'm well aware because of issues that have happened in my own ward where I've had residents that have had tree issues that have been outstanding a considerable length of time, I'm talking in excess of 12 months, and people have not been able to deal with problematic trees and other issues. At the very least, that is damaging our reputation as a council, that residents are having to wait so long. So anything we could do to lighten the load on the tree service, I think would be a good. So I think that would be a pragmatic thing. But sort of say there aren't things wrong with the tree service. There most certainly are, because you know those delays in getting requests from our residents sorted out, to me, is totally unacceptable. But sort of do a survey of every tree and see whether it needs a tree. I'm not sure that really gives us much value for money as an authority.
If I may, Chair, yeah, the reason for this recommendation is because it could actually, that there are resource issues in that particular team, I'm aware. However, a review of the TPOs could mean there are less of them, and therefore the amount of requests having to come into the service is reduced. There's also the fact that if these are out of date and no longer applicable, if we aren't dealing with applications quick enough, if those trees cause damage to nearby property, we could be liable for compensation claims, things like that. So there are financial risks around it, although I appreciate the question is, do those financial risks outweigh the costs of what it's going to cost us, of what it's going to be to actually carry out the review? So that's what the service are looking at the moment. And if it's concluded that the financial risk is far lower than the cost of what it's going to be to undertake that full review, then obviously they'll look for that action to be quashed.
Okay. No more questions? So we'll take the recommendation, which is in 10.1 of the report on page 326, and that's 8.1, sorry. The committee has recommended to note the outputs and performance against the internal audit plan for Medway for the period of 1st December 2022 to 31st of January 2023, as detailed in Appendix 1. The committee has recommended to approve the revision to the agreed internal audit plan for Q3, Q4, detailed in Section 7 of Appendix 1. And the committee has recommended to approve the revised implementation dates requested by services as detailed in Section 8 of Appendix 1. Is this agreed? Agreed. Thank you. We will take item 8 on the agenda, which is the counter fraud update from the 1st of December 2022 to the 31st of January 2023. I'll ask James again to introduce this report. James.
Thank you, Chair. Yeah, as with the previous item, this will be the third and final update ahead of the annual report. I'll take you through very quickly. Section 3, commencing on page 354 of your pack, shows how our resources have been used over the period, detailing the level of time spent on each of the key areas outlined in the plan. The tables in Section 4, commencing on page 356, provide an overview of the work undertaken in each of the areas on the plan, and the table on page 357 gives a summary of results from external investigations and the associated savings. There is a brief summary of other counter fraud activity in the table on page 358, including details of any housing benefit overpayments or council tax reduction awards that have arisen from DWP investigations, although I don't think there are any in this period. An update against the team's key performance indicators for the reporting period is provided at section 5, which starts on page 359. 21 investigations were concluded in a reporting period with associated cashable savings of 29,669. As noted in the covering report, then this now means that there have been savings of approximately 603,542 for the year to 31st of January 23, which is in comparison to Medway's share of the counter fraud costs for the shared service, which are 141,994 for the whole year. So obviously, that good value for money, we think. I'm happy to take any questions members may have.
Just a quick comment, Chairman, about the National Fraud Initiative. I think the team should be congratulated about the good work they've done. I mean, it's a huge amount of things to trawl through, but it certainly seemed to have done a good job. And I think that as an Audit Committee, we should note our thanks to for all the good work done. Because it's not just those sums that have been saved, of course, but it's that deterrent effect that gets known, that people will realise if they try to defraud us as an authority, there's likely to be consequences. So hopefully that will have a future knock-on effect as well.
Yes, in carrying on with that, if you could, James, pass on our heartiest congratulations to the team. And that's some saving as well, so it shows that the value for money is there in what we're doing. Well done. Gloria.
Quick one from me. Under fraud awareness and prevention, corporate working groups not yet started. Can you just tell me the makeup of this group and what it is? Obviously, I'm speaking from the point of view of somebody not being a member of this committee, so just enlighten me a bit and why they have not yet started, please. Thank you.
Yeah, as with internal audit, we make ourselves available to join corporate working groups for specific projects or anything like that. Obviously, internal audit provide advice on internal control, and the counter fraud team provide advice on fraud risks. It just happens that we've not been asked to join any particular corporate working groups so far this year. That may change. We're making sure that people know we're available for it. We just haven't been called upon, so it's not a case of we just haven't done any work on that. It's just it hasn't been required so far.
Okay, we'll take the recommendations of 8.1 of the report on page 352. The committee is recommended to note the outputs and performance of the counter-fraud team for Medway for the period of 1st of December 2022 to the 31st of January 2023, as detailed at Appendix 1. Are we agreed on that, members? Thank you very much. We'll take item 9 on the agenda, which is the Internal Audit Quality Assurance and Improvement Programme. Once again, I'll ask James to introduce this report. Thanks, James.
Yeah, sorry, I think it's my night tonight, isn't it? The public sector internal audit standards require that we develop a quality assurance and improvement programme that enables an evaluation of the internal audit activities' conformance with the standards, whether auditors apply the code of ethics, and also the efficiency and effectiveness of internal audit, and whether there are opportunities for improvement. The QAPE is reviewed annually to ensure it meets those requirements and accurately reflects the work of the service. Appendix 2 shows the proposed amendments that are detailed in paragraphs 3.3.1 to 3.3.5 of the covering report as track changes to make them easily identifiable. And you'll see that the majority in the body of the document do not make any substantive change, but there are some changes to the performance measures. The aim of these changes has been to ensure that members continue to receive the most relevant information, and some of the data used to calculate the outturns has also been adjusted to ensure that it provides more accurate detail around the performance of internal audit. So I'm happy to take any questions that members may have.
Thank you. I'll open up to the floor. Adrian.
Just on the performance measures, I noticed that the proportion of staff with professional qualifications relevant to internal audit, we had 65 qualified and 25, and then that's not applicable anymore. I presume really we should be monitoring outputs rather than providing the staff are able to do their jobs. Is that the thinking behind it? It's not necessary to have a formal qualification apart from those who are sort of in the supervisory position, or was that a very arbitrary figure, 65 qualified, sort of plucked from air, and it doesn't really bear relation to reality?
No. What we were actually aiming for with the percentages was based upon what we thought we could realistically achieve with the number of people that were either undertaking professional training or apprenticeships. Unfortunately, things like that are going to change due to unforeseen circumstances. One person that was undertaking an apprenticeship, for example, had to take a break, which meant it wouldn't be finished by the end of this financial year, and therefore we were never going to meet target. In the same way, the proportion of non-qualified staff undertaking training was based upon how many people we thought could be on apprenticeships at any one time. But again, that's going to fluctuate throughout the year. If someone finishes their apprenticeship midway through the year, then performance measure 1 goes up, but it looks like we haven't achieved target on performance measure 2. So because it's very much a point in time, it's difficult. That's why we've taken it out. We will still report the percentage figures, but putting in a target when things are going to fluctuate based on a point in time, when we come to the end of the year and we say, well, this is what we've got, it's not going to match up, unfortunately. So that didn't occur to me at the time when we first put this in, but obviously that's where we are now. But we will obviously still report on it because it is about the efficiency and effectiveness of the service.
Anyone else? No? Okay. We'll take the recommendation of 7.1 of the report on page 363. That is, the committee is requested to approve the internal audit quality assurance and improvement programme presented at Appendix 2 for use in 23-24. Is that agreed, members? Agreed. Thank you very much. Take item 10 on the agenda, which is the internal audit plan, quarter 1, quarter 2 for 23-24, and I will ask James Larkin to introduce this report.
Thank you, Chair. Yeah, I'm sure you'll all be pleased to know this is the penultimate one. We are required to prepare an audit plan outlining how the internal audit will be resourced over the course of the coming year. As with the current year, we've taken the approach of preparing a draft plan for the full 12 months, but the plan presented at Appendix 1 only covers the first 6 months of the year. The risk assessment to inform the plan was completed after consultation with all divisional management teams to gauge the views of managers on what they considered to be the risks to their services in the coming year. And the draft plan was also shared with them to try and identify any timing issues as early as possible, which is something we encountered this year. The plan shows links to the corporate risk register to demonstrate that the audit resource is targeted to the highest areas of risk for the authority, but I should stress that's based upon the risk register as of January, not the one you've seen tonight, because it's obviously been updated since. We will, of course, review our risk assessment for any changes in July to refresh the plan and prepare the second half of the financial year with the Q34 plan presented alongside our first update report in September. I'm now seeking the committee's approval for the proposed plan for Q1, Q2. I'm happy to take any questions.
I'll open up to the floor. No? No? Okay. We'll take the recommendation at 7.1 of the report on page 379, and that is the committee is requested to approve the internal audit plan Q1, Q2 for 23-24 as presented at Appendix 1. Is that all agreed, members? Agreed. Thank you very much. We'll now take the final item on the agenda, which is item 11, which is the counter fraud plan for 23-24. And again, I'll ask James Larkin to introduce this report.
Thank you, Chair. I can be very brief on this one. So the counter fraud plan for 2023-24 shows how we intend to use the counter fraud resource over the next 12 months, clearly outlining the work that will be undertaken in each of the key areas. We have expanded the performance information in the table commencing on page 397 to give members a more rounded picture of the case outcomes opposed to just the financial information. There's been no other real changes. I'm happy to take any questions.
Again, I'll open this up to the floor. Okay, we'll take the recommendations at 7.1 of the report on page 391. And the committee is requested to approve the counter-fraud plan for 23-24 presented at Appendix 1. Is that agreed, members? Agreed. Thank you very much. Well, the meeting is now closed. Thank you very much for attending. Thank you.